Let's start building our trading universe. In my experience and also with feedback over the years, generally when people start off with some of the foundational concepts that I will discuss in this video, they're usually a little bit better off because they actually understand what it is that they're doing. So I go off something called trading etiquette. What does that mean? I used to think that I needed a lot of input or a lot of variables in order for me to make concise decisions. I have now flipped that on its head. I look at trading more in a subtractive sense than I do in an additive sense. That means that I generally point out when someone is new to trading based off some of their questions, terminology, vocabulary, and definitely when I'm looking at their setup. I know that you don't need all that information there. That is what trading etiquette is all about. So I'm going to share with you my chart, and admittedly, I already know this, that my chart looks very busy, but we will start from a very bare sense, and then we will build up from there. So let's dive into that. Here we are on IWM. Everyone usually starts off with SPY. I wanted to be a little bit different. A chart is a chart is a chart. We're on the daily time frame, and as you maybe made the astute observation, there's not a lot of indicators going on. The only indicator that we have is strictly price action. Price action is the most real-time information of what's actually going on in the market. Here is the 5-minute time frame. You can even dive in deeper into the 1-minute, 3-minute time frame. A lot of you spend time there. That's okay. The whole purpose of this video is not to tell you what indicators to use, but to think about why you're using that indicator. So there's a big difference. So let's go back here to the daily time frame. As I start building a little bit more of what it is I'm going to use as a trigger for a buy or a sell, I'm going to very slowly start introducing new information. I'm not going to do that here. You guys are going to understand why it is I'm putting all this stuff. A lot of you are going to see this and say, it's too busy. I don't know even where to look. That is the general consensus of most people that are coming into the market for the first time. What the heck is short interest? What is volume? What the heck is this squiggly line thing? Why do you have so many lines there? What is that red and green thing going on? What about that price action? Why do you have different colored lines there? These are all valid questions. My recommendation to newer traders, or even if you've been doing this for 20 years, it doesn't matter. You can impart and you can use so many indicators, but if you don't know where it is that you are consistently taking your buy or your sell signal, you're going to be emotionally and also physically drained, because this is exhausting to look at from day to day. If you're going to do this off the 5-minute time frame, just notice I have a heat map on, I have the POC. You don't need to understand these terminologies, but remember what I said when we first started. You want to be more subtractive. If you have more than 3 or 5 conditions where if they are met and they have something called confluence where they're being met at the same time, that is enough for you to trigger a buy or a sell signal. On top of that, you're going to put on risk reward, and then you have a recipe for a successful trading system. So let's back off here. Let's take off the heat map, which is already a lot of information. Let's take off other data. So we're starting to subtract here. We're going to remove the trading patterns, and let's remove some of the candle patterns as well. Now we have a little bit of a cleaner chart. We have something called the Bollinger Band, and then we have the moving averages here. It is my recommendation that you use some form of the moving averages going forward. But notice, I really want to drive this across, and let me know in the comment section if I'm doing a good job with this exact point. You want to be more subtractive. If you want to take off your indicators and be specifically a purist, what I didn't show you on the chart is how to detail out supply and demand levels. You can do that, and it's a very subjective thing. The higher the time frame, usually the better the support and resistance or supply and demand levels are going to be. We will talk extensively about how to do this on those larger time frames. So notice, once again, I pulled off a whole bunch of information. So here, I can make clear and concise decisions based off what I'm seeing on the candle. On the 4-hour time frame, same thing. You guys can see I was sort of building a trade already. I wanted to include this in the example because I have a demand level that I'm interested in. Why is not so important right now. What is important is for you to notice less information overall. If you have too much information on the chart, you get something called analysis paralysis, where you're looking for 5, maybe 6, 7 conditions to be met in order for you to trigger the trade. At that point in time, you're going to have where they're meshing together and some signals are invalidating others. Our general recommendation is that you have anywhere between 2 to 4 different signals that are giving you the same interpretation. That same interpretation is open to discussion. That's what trading is all about, and this is where we have disagreements. They're very common. When you're doing this off the higher time frames, the general consensus is those 3 or 4 triggers are a little bit stronger. Why? Because the people that actually move the market are not looking at the 1 or 5 minute time frame. They're waiting for their $100,000, $200 million servers to do that job for them, right? They're doing algorithmic trading. That is not my thing. I don't like to trade off those time frames because I know the susceptibility of us being irrational and emotional in those time frames. So now let's go back here to the daily. Let's come full circle. When we're talking about trading etiquette, just know that when you are putting your indicators or information on, just like I'm going to do now, you have to know exactly why that is there. So I'm going to spend 2 minutes doing this. My oscillator tells me if we are in an oversold or overbought environment. The more we are stretched to the downside, the more oversold we are. Here I have the 200 EMA and SMA. These are simple moving averages and exponential moving averages. There is very good data behind when we start trading into the 200 moving average. That is generally where institutions are looking for a point of interest, especially if they see value. So in this particular situation on IWM, we did come back down to the 200 moving average, and not that much of a surprise, but we are starting to bounce off that level, and I'm seeing a relief of selling pressure off of the TTM. I'm also looking at the volume bars. I want to know how much volume is coming behind each candle that is printing on the daily time frame. This can be used on different time frames. But notice that as I'm going through my indicators, as I'm detailing them out, I know what it is that they're doing, and I know what it is that I'm looking for. Right here, we have the 8-day moving average. We also have the 13, the 21, and the 50 here as well. I think the 13 is actually off, so only 8 and 21. And then here, I'm using another indicator. So I have more than the previous 2 to 4 that I just explained to you. I like using a lot of information because I have a tendency of making big calls, right? A lot of people are depending on me to make these calls. So I want to have all the information I can that will not be a detriment. When I'm looking at this right here, this is called a volume profile. Why do I use that? That is where there was a high exchange of buy and sells for shares, and I want to know where that was. The general consensus with any volume profile is as we're trading down into that area, depending on where I anchor it, I don't want to get too much into this. We'll spend more time on different videos. As I anchor this in a different location, these volume profiles are going to change. I just want to know where those pockets are. And probably the last thing that I'll discuss is going to be the Bollinger Band. I'll be perfectly honest. I don't use it that much. So in this scenario, just like what I'm saying, I'm going to go here into my indicators and I'm going to just take off the Bollinger Band because I really don't use it all that much. I'm using fundamentals. Let's go a little bit further up. Let's see where they are. Volume, alpha trends, anchored VWAP. I use that quite a bit. And let's see if I can remove the Bollinger Band. I'm not using it that much, so let's just take it off the chart. In this very real world example, I just took off an indicator that I have on there, but it's not making any critical decisions. So I'm going to keep it pretty clean from here. That's basically it. This is trading etiquette in a nutshell. Why is this even important? Have purpose on everything that it is you're looking at. But on top of that, from a technical viewpoint, if the technicals, if they are clashing or there's just an overabundance of information, what it is that I shared with you after removing the Bollinger Band there is a relatively clean chart. You want to have a system that is repeatable, not something where you're waking up and you're saying, is the stock going to jump or is it going to fall today? All of that you're going to have in the back of your mind is risk reward. Is it even worth it? But you're going to trigger the buy or the sell signal off of your indicators and off your system. This way, it's repeatable and more long-term as opposed to, what are we doing today? Are we going to buy NVIDIA calls and just see how it goes? I don't know about you, but I'm not really that interested in that kind of system.
I'm not sure I'm interested in that. No, I am sure. I am not interested in that.
Moving forward, I will share in great detail every indicator that it is that I showed you here, why it is that I'm using them, and we'll also talk about some paid indicators that we like as well, we use, and we've been using them to our advantage with some ensuing videos going forward.